Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each to an average return of 3.5%. It's not 201 consecutive trades. We do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, I'm going to be looking at a new AI stock to the channel. I'm also going to be looking at legal and Congress updates for MMTLP. So before we get started, let's give a shout out here to Charles Payne, who's talked about a new squeeze season. So what he stated in his first post here is heading to the studio. It's a short squeeze season. I have a special guest looking at a special name. Should tune in for sure. So let's have a look at what he followed up with. And he's talking about GME. Ready to pop, question mark, short squeeze candidate, tune in to making money. So let's see what was stated in the program. Let's start by having a look at the legal and Congress updates for MMTLP. So first shout out here is to Richard Hoffman, who's just posted earlier today. For your information, notice of appeal filed today against FINRA and DTCC regarding immunity issues. And we also wait for further updates, and the update with regard to what has been done in terms of the deliveries from Hollywood Henry here. He said 245 phase 1 packets have been sent, 97.25% have been collected. Remaining 8 scheduled to arrive by Saturday, and that should come to 100%. And phase 2 is to target 100 media outlets. So thank you there for Hollywood Henry for that great campaign. And the other great news here from Liz is breaking news: FINRA versus the Financial Services Committee. This is the meeting between FINRA and Congress, the highly anticipated event that we have been waiting for this Friday. So we will obviously continue to keep up the pressure. This will be done respectfully, so we will be heard. Let's start by having a look at the new AI stock to the channel, also known as ShiftPixy, ticker symbol PIXY. So this is a disruptive human capital services enterprise. It's revolutionizing employment in the gig economy. It's a next generation platform for workforce management. It helps businesses with shift-based employees. It's also minimizing administrative burdens with better connect with a ready-for-hire workforce. The company is adding a needed layer for addressing the compliance and continuous demands for equitable employment practices in the growing gig economy. Let's now go ahead and have a look at the website. So on the company website, we can see here their strategy is post-open shifts, hire qualified workers. So in terms of their technology, they have automation. Reliable ShiftPixy technology enables you to keep your schedule filled with a live on-demand workforce. So very forward-looking there. In terms of access, the ecosystem lets you find workers who are interested, experienced and available, which obviously is essential for workforce of today. Liberation, ShiftPixy with ShiftPixy, you shift the risk of regulatory challenges away from your business. So that's great news there for employers. In terms of the story, we can see here the purpose is to bring efficiency to the part-time labor market. So this is something that is much needed. They are combining modern perks of the gig economy with traditional employment benefits. So they do have an app, and this app, it serves an all-in-one workforce management platform for operators and, in other words, business owners that rely on contingent employees. It's also a dynamic employment resource for shifters, people who work part-time, people who potentially also work flexibly, and it gives freedom to make your own schedule. So this is something that gives valuable benefits such as health insurance, also workforce compensation, and operators will find it easy and also enable them to remain compliant with the labour laws. And this gig platform truly represents the new way of working that is currently going on in the world today. So let's have a look at the figures for the target market. So we have 30 million part-time workers just in the United States. ShiftPixy bills looking at $20,000 per year per shifter. So in terms of the target market for Pixy, they're looking at targeting 10 million of this unserved population. ShiftPixy's GP per shifter is $1,200 per year. So that's an excellent figure there. In terms of the AI potential, if we have a look at here in their presentation, new problems can't be solved with legacy thinking. So this is a software and platform that incorporates AI and automation technology into interviews to facilitate the hiring process to create convenience and efficiency, immediate and instant engagement. So this certainly seems like a tremendous application for employers and also shift workers. So let's have a quick look at the CEO. So Scott Abshire is the co-founder and chief executive officer. He brings 30 years of experience. Scott started his career in product development and support. Obviously now he is the CEO of ShiftPixy, and he's looking to focus on the employer services industry. So before looking at the chart, I'd like to share with you a recent news article, and this was from May the 18th, 2023. So the headline here is ShiftPixy initiates investigation of suspicious trading activity in its stock leveraging new data and legal framework. So let's have a look at what the implications of this news article are. So first of all, it states here the company has announced that it has engaged a broker-dealer to review PIXY trading data and collaborate in filing the FinCEN 314 Section B suspicious activity reports, also known as SAR. So information sharing pursuant to Section 314B is voluntary, and FinCEN strongly encourages financial institutions to participate, and it can yield a number of useful outcomes. So in terms of what the company are looking for, they're looking for 3 key outcomes here. So the first one is more light upon the overall financial trails, especially if they are complex. And obviously we're looking at also alerting other participating financial institutions to trading entities of whose suspicious activities they may not have been previously aware. So that will be certainly very enlightening. And the third thing they're also looking at is facilitating the filing of more comprehensive SARs than would otherwise be filed in the absence of 314 Part B information sharing. So let's have a look at what the CEO Scott has said about this, and what Scott has stated here in terms of what's been happening is that Scott has been tracking naked short selling practices and patterns since we first listed. They are now seeing algorithmic trading running wild, as these trades appear to be run through a black box that is out of compliance with the regulation SHO and the fair market making requirements. So that's obviously a serious concern. He's also able to say here that we're able to track trading activity in real time with level 2 data and DTC weekly reporting. You can also track the registered market makers conducting these trades either as proprietary transactions on behalf of a client or via a sponsored or market access agreement. So Scott also states that he believes that we will be among the first to correlate monthly market share volume, daily share volume and share imbalance and data within this legal framework strategy to identify and uncover suspicious trading activity on which we can follow up with appropriate legal action. So a very strong message at the end. Once this data is obviously made available, I think that could obviously potentially lead to an impact on the share price, especially if it's going to follow up with some legal action. So this is something that we are certainly going to watch. But let's now have a look at the actual chart and how it has been trending recently. So let's have a look at the chart for today. So at time of editing, it was up in excess of 5.12% at $2.26. I think it has just come down to close to $2.21. So probably closed at around about 2.2%. However, if we have a look at the 6 month chart, which I think is more interesting, we can see around about February 2023, it was trading around about the $10 mark. It has come down quite significantly since then. So over the previous 6 months, it is down approximately 29%. So one of the reasons for this, I think, certainly could be explained by the previous news article that we've just looked at. It has from around about April to present time, it does certainly seem to be consolidating below the $5 mark and strong resistance just above $2. And hopefully with the news that is coming and also some of the earnings and the revenue that we're going to look at shortly, there can be a bounce back. So we have a look at the earnings date. It's expected to be around about the 21st of July 2023, according to the NASDAQ. And if we have a look at the analyst ratings here, we can see there is a very strong buy rating, 83%, and analysts have set a mean price target of $5.61. PIXY was analysed by 7 analysts. The buy percentage consensus is at 83. So Analyst certainly seems to be very confident about the stock and the business itself. We have a look at the price target here. On a low, we're looking at $5.56. On a high, we're looking at $5.78. And if we have a look at what one of the recent analysts have stated about the company, we can see here March 6, 2023, Ascendant Capital has initiated a coverage of ShiftPixy with a buy recommendation. So strong news and positive coverage there. And finally, I'm going to have a look at growth rating for the company. Growth rating is a 5, so it's expected to show a strong growth in earnings per share in the coming 5 years. Earnings per share is expected to grow by 25.63%. The revenue is also grown by 57.3% in the previous year. That's obviously very, very strong, and it's also showing quite a strong growth in revenue measured over the last 5 years, with an average growth of approximately 12.21% yearly. So in an upcoming video, I'm also going to be sharing with you some information directly from the company themselves, especially with regard to some upcoming catalysts. And finally, if you'd like to get a copy of our weekly watch list as well as our daily stock alerts, you can join us. Details are in the description below. Thank you very much for watching. Please stay tuned.